podcast topic is most interesting topic about IPO, that is navigating IPOs in India. A complete expert discussion with Mr. Sandeep Gupta, who is the director of Valmiki Leela Capital Private Limited, SEBI registered merchant banker. Welcome, Sandeep. So, Mr. Sandeep Gupta is a seasoned finance and capital market professional with over a decade of experience in the industry. He is a qualified chartered accountant by profession. He is having offices at Ahmedabad and Mumbai location, and they are offering merchant banking and corporate advisory services. During his career journey, Sandeep has successfully led and executed more than 50 capital market transactions, including IPOs, valuations, right issues, takeovers, buybacks, and a wide range of strategic corporate and transaction advisory assignments. Today we will going to discuss everything about IPOs in India, from the basic to the advanced insights. We will prepare this video in two parts so that we can broadly cover all the aspects about the IPO. This is the must watch video if you wanted to bring IPO of your company, or if you wanted to build your career in the public and bringing the IPO. In the first part of the video, we are covering all about the IPO, like starting from the meaning, advantages, disadvantages of the IPO, regulators, intermediaries roles, eligibility criteria, process of IPO, IPO price band, etc. So can we start, Sandeep?
Yes, sir.
Okay. First question is, what is an initial public offering, IPO in simple terms?
So thank you, Devanshi, for having me here. As everybody knows, IPO is a kind of fancy term nowadays. Everybody wants to be part of the IPO process.
Yes.
So IPO from a investor, merchant banker, and a company perspective, basically IPO gives you the platform for an investor and the promoters to create a long-term wealth.
Okay.
So it's a fundraising platform for anybody. So it is basically a long-term wealth creation, and it will give the company a boost in terms of growth, in terms of the brand visibility.
Mm-hmm.
So IPO is a first time and a one-time activity for any company.
Okay, great. Okay, what are the major advantages of listing on the stock exchange?
So we have done almost 50 plus transactions, and we meet a lot of people. We ask, what is your vision for IPO? Why do you want to IPO?
Mm-hmm.
So basically, you can say IPO. While the IPO comes, the company is known to everybody in India. So your branding will be done. Your company will be known to even a small person, small city, tier 2, tier 3 cities of India. So it gives you the brand recognition. It will give you the access to the larger capital. So for example, once you are listed or about to get listed, a lot of banks, financial institutions will come to you, since your balance sheet will be more better for them in terms of ratio, capital efficiency, the debt equity ratio. So a lot of avenues will open. Then assume you have a very good, your employees are very good. You don't want to give them a hard cash outflow. You can give them ESOPs, right? So they can cash out from the market. So there are a lot of options. Second, for me, what we generally see is IPO is just the first beginning for anyone. And so starting from a capital, brand recognition, various aspects in terms of growth. So you have a very strong negotiation powers from your suppliers. You will be basically, you are already scrutinized, your trust level will be increased, transparency will be increased. So these are the key benefits.
What are the disadvantages of or risks of going to public?
So we generally talk like IPO is a marriage, not a date. So you can't just walk away. So basically, once you are listed, you will come into the lens of public, the institutional investor. You have to answer each and every decision that you have taken. So assume a situation where earlier for a growth you would take any decision, you are not answerable to anyone, since you are the promoter, you are the management. So post listing, your credibility will increase. You are supposed to answer in say quarterly earnings call, regular investor meets, even annual general meetings. You will be answered for your decisions that have been taken. And sometimes what happens, you have to perform every quarter. So in each and every quarters, you will be measured by a lot of research analysts, fund houses. So a lot of pressure, lot of you can say performance pressure will come on the company to perform well. Now sometimes this will lead to a situation where long term, just to reach a short term goal, long term goals will be delayed.
Correct.
So this is the major drawback what I see. Then there is a compliance burden.
Correct.
Every yearly you have to appoint a company secretary who will be complying with lot of regulations. So compliance is there, cost burden is there. But apart from that, what we feel is the discomforts are less, even
Correct.
positive sides are more. So IPO is always a welcome thing for any company.
So there will be continuous eye on the company
You will be
from the
scrutinized every time. So whatever
from public,
you say,
regulator or the financial institute, every type of stakeholder.
yes, whatever you say, you will be answerable for these things.
Correct. So in some way it is also benefit for the company that company is doing proper compliances and working in a proper manner.
Yes.
What is the difference between an IPO, that is initial public offering, and FPO, follow on public offerings?
So IPO is basically a debut. It's a one time and the only activity, first time the company does. Further public offer is basically a comeback performance. So once you're listed, it's a offer to the public. So even say post listing you need more capital to grow, you will again ask to the public.
Okay.
So it's a comeback performance. You will be judged based on your past performance, what you have promised at the time of IPO, what you have achieved, not achieved. You will be questioned in that way. So IPO is a one-time and first-time activity, and post-listing, whatever public at large funds are raised, these are called IPOs.
Okay, so FPO is also for the public.
It's a further public offer and initial public offer.
Okay, so both are open for public.
Yes.
Okay. Okay. What are the major regulators and intermediaries involved in an IPO?
So if we talk about regulators, SEBI is the foremost regulator in the capital market. SEBI is there. We have ROC, we have MCA, we have RBI. So these are the key regulators who deal into the IPO process. Sometimes the company is regulated by, say, if it's an insurance company, then that will also come into play. If you talk about the intermediaries, then merchant banker is the nodal agency for the entire IPO process. We have legal advisors, we have auditors, we have company secretaries, we have banker to the issue, we have IRPR agencies. So almost 10 agencies are there. So merchant banker act as a bridge between these entities, ensures the entire process end to end, and it will ensure the IPO is sealed.
Okay. What role does CB play in IPO?
So SEBI is the market regulator. They are basically representing the investors. They will protect the interest of the investor in the process. So they have authorized merchant bankers to handle the entire process, and they will evaluate the merchant bankers in the. So SEBI's role is to basically create regulation, implement the process, and review those implementations. Even approve the DRHPs, review the entire 400-page risk factor objects, whether these disclosures are proper or not, whether the investor will be able to make informed decisions. So 20 years from a passive regulators, SEBI is now super active.
Okay.
So once if you're complaining to SEBI, they will respond immediately.
Correct.
So we have seen in the IPO process, if a small investor is sending any query, the SEBI's officer call will come immediately that you have to respond in a very short time.
So SEBI is acting very
It's a watchdog
proactively for the
entire
purpose of
process.
investor protection.
Yes.
So investor protection is vital for the
Exactly.
from the SEBI perspective. Okay. What roles do merchant bankers, registrars, underwriters, and legal advisors play?
So, see, merchant banker's role is to ensure everybody is working as per their scope.
Okay.
So there are three aspects in the DRHP. One is basically a secretarial aspect. Second is a financial aspect. Third is a legal aspect. For all the three, we have a professional. So the PCS form and the in-house CS of the company will handle the entire secretarial aspects. Then the financial, the auditor will be taking care of the financial due diligence, restatement of the financial, the certifications, and circle up of the numbers. Then the legal will be basically doing the legal due diligence and drafting the entire book.
Correct.
So the merchant banker has to coordinate with the company, all these intermediaries, that all the informations are true, correct, and basically there is no gaps into this. So this will happen. Then RTA will come. RTA's job will start post at the time of issue opening.
Correct.
So they will handle millions of applications. So assume in IPO say 20 lakh applications are coming. They will process each and every. They will filter the valid application, prepare a basis for allotment, do the amount blockage, then the credit of shares, refund of money, allotment of shares. So they will do the entire process. They will create a report. They will submit to SEBI that this much application has come. This was rejected on these grounds. So they are answerable for the investor query also. If say someday you come and ask me why my application was rejected. But they will create a trail of this why on these bases your application was rejected. So they are basically post listing. They will handle everything.
Okay.
So what you see during your IPO process, the SMS will come that your funds are blocked, your shares are locked. So all these tasks are handled by the system. Then legal agencies are there. Legal agencies will basically draft a book, do a legal due diligence. So there are two legal agencies. One is a legal agency for the company.
Okay.
Then there will be legal agency for merchant banker.
Okay.
So merchant banker will also appoint a legal counsel for BI.
Okay.
So their task is basically to ensure on the legal aspect everything is proper.
That's great. So RTA and legal advice would be very crucial.
Yes.
Very crucial. What are the eligibility criteria for the companies to launch an IPO in India?
So generally we call a 6-1 and 6-2 rule. So in SEBI ICDR, if the company is profitable, 6-1 rule will be applicable. So your operating profit, basically it's a profit before tax. We adjust it for the finance cost and other income. If it is more than 15 crore on average basis for last 3 years.
Okay.
Then there is a net tangible asset criteria for 3 crores in last 3 years.
Okay.
Then you have a net worth criteria of 1 crore for last 3 years. Basically, these are the 6-1 rules for a profitable company.
Okay.
Now, assume a company which is not satisfying these criteria, they will go for a 6-2 route. We call a fast track route or a QIP route.
Okay.
So assume Zomato, Zepto, Paytm. These are the companies. They have a very good business, but they are not profitable.
Correct.
So they can bring their IPO in 6-2.
Okay.
So the major checkpoint is that here the allotment will be more than 75% of the allotment will be made to the QIB investors.
Qualified institutions.
Yes.
Okay.
So basically they are very informed investors. They have a research team. They will understand the business and take a call. So if they are able to subscribe to 75% of the IPO size, then SEBI is okay.
Okay.
They are saying even if you are loss making, if they are ready to give you money, you can list on the stock exchange.
Okay.
So 6-1 is the profit making for the profit making companies, and 6-2 is basically for newish tech companies.
Okay. What is the role of stock exchange like NSE and BSE?
So NSE and BSE, as we all know, it's a trading platform. So in India, as of now, we have two recognized trading platforms, NSE and BSE. So NSE, just far more than a trading platform, they act as a quasi-regulatory body.
Okay.
So whatever acts SEBI is doing, exchange will do the similar task at their end. So they will also review your in principle application, what the company is filing. Then they will basically review your entire 400 pages document. They will give you the observation. They will ask you to make changes.
Okay.
They have also the power to ask you to withdraw the document if they are not satisfied.
Okay.
If the object is not good. So they are almost at par with the SEBI.
Okay.
Then their role is also to list their equities on the stock exchange. They will give you the platform where you can check the subscription, how many times, who has subscribed. They will also publish the data for all the companies. They will ensure that on the listing day, equity shares are listed. So they are kind of regulator, they are kind of guardian for investors.
Okay.
So they will also say they are also the regulatory body for stockbrokers.
Okay.
So they will ensure that your broker is acting well, your shares are credited. So SEBI, NSE, BSE, these three are the kind of regulator for the entire capital market.
So they are playing the role pre-IPO, during IPO and post-IPO?
Yes.
Okay.
Yes, even post-listing, once shares are listed, they will ensure that all the corporate governance, disclosures are being made in time.
Yeah. So all the quarterly compliances, everything
has to be
PSE. Okay. Can you briefly walk us through the entire IPO process step by step?
So we say IPO is a marriage.
Yeah.
So it starts from a merchant banker's mandate signing to the date of listing. It's a very long journey. So it takes almost 8 to 14 months sometime, depending upon the history of the company. Older the company, more time it will take.
Correct.
So we divide the entire process into 3 parts. First is a preparatory part.
Okay.
Since incorporation, all your compliances will be checked. Your financial DD will be done, your legal DD will be done. So it takes at least 2 to 3 months.
Right.
So assume doing the corporate governance, identifying independent directors, forming committees, then cleaning the books. So before IPO, say when planning for IPO is not done, then the management or the promoter is the sole decision maker. So there has to be corporate governance setup is there. Then we do a structuring, capital structuring, management structuring, board structuring. Then sometimes you have to take approval from the banks So NOC and consent party is done. So this process takes almost 2 to 3 months. Basically, we call it a IPO preparedness task.
Right.
So once this is done, we appoint intermediaries, legal counsel, merchant bankers, then your auditors, PCS firm. What they will do, they will do a due diligence of entire process.
Okay.
So the due diligence and the preparatory task takes almost 2 to 3 months. So in this process, they will do a due diligence, they will create their observations, they will draft a book, the entire chapter by chapter DRT filing will be done.
Okay.
So these chapters will be prepared, they will be reviewed by everybody, including company, merchant bank, legal advisor. Then the legal advisor will stitch a book. We call it a stitching a book.
Okay.
So the individual chapters will become a 400-500 page a book. Then this will be circled up by the auditors. So all the numbers are circled up by the auditors. And these are submitted to the stock exchange SEBI.
Okay.
So first 2-3 months for a preparedness, then another 2-3 months for a DRH book and compliance.
Okay.
So within 6 months, your DRH will be filed with stock exchange and SEBI. Now SEBI will read your book, entire book, business, object, risk factors. They will evaluate, they will do analysis, and they will give you observation.
Okay.
So SEBI approval process takes almost 3 months. They will give you the observation that these changes you have to make. Now, once approval is done, now merchant bankers and underwriters will meet a lot of investors. They will do a market survey. They will do a demand analysis, like who are the investors who can be best fit for this company, what valuation the company is expecting. So valuation will be done, meetings with investors will be done, and post meeting their intent will be recorded. Like yes, we have sufficient demand from investors who will be ready to participate in the issue. Once this is done, SEBI is expecting us to, before filing the RHP, you should file with your DRHP with the SEBI. So whatever changes they have suggested, with those changes, how my final book will appear, that has to be filed with SEBI. That also they will review within 7 to 10 days, and then they will give you the go ahead for the RHP. So UDRHP to RHP takes almost a month.
Okay, so draft red herring prospectus to final red herring prospectus.
It's an updated draft to a red herring prospectus. So once your UDRHP is updated, you basically decided a date schedule, like when the RHP will be filed, when issue will be open, when it will be listed. So from RHP to a listing, it is around 15 days of task. So post RHP filing, issue is open for generally 3 days, and then after T plus 3 days, T1 is an allotment day, T2 is basically a credit share, T3 is a listing day. So if you take from a mandate signing date, it takes almost a year for anyone to. It's a very patience game.
Correct.
So a lot of people are involved. More the people, more opinions will come.
Right.
So merchant bank has to coordinate everything. So they will ensure the process is smooth, approval is coming, issue is subscribed, it's getting registered a positive. So this is the entire process.
Okay, so it's almost 12 to 14 months, big journey.
Exactly. So company will be entirely cleaned up.
Correct.
So from every aspect, business, the financial, operational, process, the company will be cleaned up. They will be more optimized when what I say. So in IPO, through a fundraising, all your past judgments, your non-compliances are being tracked. They are sent for compounding or the adjudication, the entire process.
Okay, so I have seen so many companies from the sole proprietorship or private limited has gone.
So this, the first phase of 3 months, we do entire structuring. We have to take over any company, we have to say convert to a part of the same group, so all structuring is done.
What are the major costs involved in launching an IPO?
So we divide the entire IPO cost into 2 parts. One is a fixed part and second is a variable part. So the legal advisor, the auditor, the PCS firm, stock exchange, the marketing agency, the newspaper agency, this comes under the basically a fixed part. So their fees is fixed irrespective of the issue size. So which typically ranges between 2 to 2.5% of the issue size. For example, a 1000 CR IPO size, there will be a fixed cost around 20-25 crore. This is a fixed cost. Now another fees comes is the underwriting fees or fundraising fees. So basically it's a variable part which is connected to the IPO size. So depending upon the size of the IPO, depending upon the sector, depending on the market timing, the fees will vary ranging from 3 to 5%. So if we combine all these three, your total fees for the IPO size is around 5 to 7%. And it's a one-time cost. And against the benefits what company is getting, it is very negligible.
Okay, so if I have seen that the company are going with IPO just to recover their debt, just to close their loans and bring in money from the public as a shareholder.
So that is basically a object of the issue. For example, 100 rupees you are raising from market. Then say something will go to debt repayment, something will go to say capital expenditure, something will go to capacity enhancement, something will go to a target acquisition, something will go to working capital management. Then 25% of the ratio is kept aside for a general corporate, for which you don't have to justify the investor.
Okay.
It's for general purpose. You can use it based on your business contingency.
How long does the IPO process usually take? I think we have already covered it.
Yes.
Takes to 12 to 14 months
Yes.
of time. Okay. IPO issue prices are decided.
The most debatable issue.
Correct.
For a promoter, he is building a gold, and generally the merchant banker and the investor will actually give the fair value. So in terms of valuation, there are multiple methods. So we generally do commonly use valuation method is a price to earning multiple method. So we identify good companies of a similar space, similar size. We call it the apple to apple peer.
Okay.
With apple to apple peer, we apply their ratios to our company, apply some discount, creating some room for investor in terms of value creation. So assume if say Eligibility is there and their peer is listed at say 20 ka multiple, then I cannot ask 20 or anything more than 20. I have to come at a discount say 15 or 16, then it will be a successful IPO.
Correct.
So price to earning is one of the method. Then we evaluate a company based on EV by EBITDA. So if the company is say very capex heavy, company is basically very leveraged, high debt is being taken. So EV by EBITDA is a very fair method. Then generally if say you don't have comparable peers, so what we do is we do a market survey. The company generally does this from the industry provider, and the basis that we create a financial model and value the company based on the future projections. So DCF is one of the valuation method. So combining all these three, we come to a particular range. So there is no exact price. We do a price band basically suggest. So with these range, we go to investors. They will do their own research, own analysis, and they will determine a price. So ultimately, investor has to fund the company. So valuation is very subjective. It depends upon the market timing, the company size, the company sector. If say company is into solid sector tailwind, for example, EV companies are in very demand as of now. The defense company has a very solid demand. So sector plus the company's own performance, past track record matters a lot. A good promoter, a good corporate governance company, a clean company is always favorable for the investors. So it's a mix of a lot of things. So it's always a tug war between promoter and the merchant banker in terms of valuation.
So valuation is conducted by particularly merchant bankers.
Yes, so merchant bankers basically does a market survey in terms of peers. They will do their own analysis with the research team. So and then these information will be discussed with investors.
Okay.
If they are able to have the same sense of valuation, same sense of numbers what the merchant banker is getting, then the particular valuation will change. Otherwise, they will ask for a discount.
Okay.
If we are not comfortable at this valuation, give some discount to us.
What's the difference between the fixed price issue and book building price issue?
So, book building, as the name suggests, you are building the book. So, as in when the price band is given, for example, 100 rupees is the. So, there's a two terminology. One is a cap price, second is the floor price.
Okay.
So, cap price is say 100 rupees. Then your floor price can be maximum of 120 rupees and minimum of 105. The range is between 5 to 20%. Now, what happens? In book building, the investor has the flexibility to either bid at 100, bid at 101, and it can bid up to 120. Now, assuming I have 10,000 shares. Now, at what maximum price my 10,000 shares of quantity is being absorbed, then this will become my price. For example, everybody is applied at say starting from 101 to 120, but my demand is getting absorbed at say 108.
Okay.
So anybody who has applied at 108 and above will get allotment.
Correct.
And the lower than that, they will be basically their application will be rejected. So in book building, you have the flexibility with the investor that they can decide their own price. Generally in India, 99% of the cases, the floor price becomes the issue price.
Okay.
Because the investor and everybody applies at the highest price to get the allotment.
Correct.
Now, whereas a fixed price, you don't have any flexibility, is a single price appearing to you for investor. But in India, all the main board IPOs or good size IPOs coming to book
building.
fixed price is very rare.
Yeah.
You see, generally in SME IPOs, you will see fixed price issues.
What is the GMP, that is grey market premium, and should investors rely on it?
So GMP is again one of the most top topic from the investor perspective. Basically, GMP gives you the single price which indicates the kind of premium you'll be getting from the IPO. So for us, it is non-regulated, non-approved, and generally it doesn't give you the true picture of what is being for what is the valuation of the company. So GMP is basically say 100 rupees my issue price. If GMP is coming say 20 rupees, so it is expected that my issue listing price will be 120 rupees. So GMP can be tracked, it can be viewed. So, but it is not the sole metrics you will rely to invest or put in your hard money.
Okay.
So we generally say just give 10% of the weightage to GMP,
Okay.
and so there are a lot of manipulations in the GMP now. In India, the investor they are so they're trading in GMP. They have now started created the derivatives of GMP.
Okay.
So the gambling and the manipulation in the GMP is very tough. So we generally don't recommend as a matrix for GMP to apply in IPO.
Okay, so that's all for the first part. Thank you very much, Sandeep. So if you have any query regarding this topic, or you wanted to have a service of IPO or any corporate advisory service, so Sandeep is here. I have mentioned the link or contact link and the website link of this Valmiki Leela Capital Private Limited, which is SEBI registered merchant bank, or you can simply write in the comment section. Don't miss the second part of video. We will cover investor perspective, like how to apply for an IPO, categories of investors, IPO allotment, factors to be considered before applying an IPO, IPO readiness for the companies, challenges, opportunities for the professional, etc. Stay connected for more videos. Bye.